Hello everyone. So today I'll walk you through last week's economic highlights, the financial market performance, and the key events to watch for in the week ahead. Let's get started. Japan's economy expanded by 0.3%, slightly above the forecast of 0.2%, though slower than the previous quarter's 0.5%. This modest growth reflects ongoing global demand challenges. Core CPI month-over-month stood at 0.3%, and the CPI year-over-year stood at 2.7%, up from 2.6% in October. Inflation remained stable but showed slight upward pressure, keeping under close watch by policymakers. The European Central Bank lowered its main refinancing rate to 3.15% from 3.4%, and the deposit facility rate to 3% from 3.25%. The ECB's decision reflects a cautious easing stance to support growth and ongoing inflation concerns. The Bank of Canada reduced rates to 3.25%, aligning with expectations as it balances slowing inflation with the need to support economic recovery. U.S. crude oil inventories declined by 1.425 million barrels, although the forecast was 1 million only, pointing to tighter supply conditions and supporting energy prices. Initial jobless claims increased to 242,000, signaling a slight softening in the labor market. PPI month-over-month wholesale inflation rose 0.4% from the forecast of 0.2%, indicating ongoing price pressures at the producer level. The UK economy contracted by 0.1%, reflecting continued economic fragility amid weak demand and inflationary pressures. 10-year Treasury auction December 11th yielded 4.235%, slightly lower than the previous auction's 4.347%. Strong investor demand suggests confidence in slowing inflation and economic stability. 30-year auction yielded 4.535%, down from 4.608% previously. Continued demand for long-term government debt reflects investor caution and appetite for safety amid economic uncertainty. The financial market performances: NASDAQ Composite finished at 19,926.72, up 0.1%, supported by gains in technology stocks. S&P 500 finished at 6,051.09, slipping by 0.64% as weakness in industrials and energy weighed on the index. Dow Jones Industrial Average declined by 1.82% to close at 43,828.06, reflecting losses in healthcare and industrial sectors. Russell 2000 ended at 2,352, down 1.95%, as small-cap stocks faced selling pressure amid investor caution. Crude oil futures closed at $70.68, gaining 3.38%, driven by supply concerns following significant inventory drawdowns. Looking ahead, here are the critical economic events to watch. U.S. Manufacturing and Services PMI is scheduled for December 16th. S&P Global Manufacturing PMI is forecasted at 49.4, while Service PMI is expected at 55.7. Core retail sales month-over-month are expected to rise by 0.4%, while overall retail sales are forecast to grow at 0.6%, reflecting healthy consumer spending during the holiday season. The Fed is widely expected to announce a 25 basis point rate cut, lowering the Fed funds rate to 4.5%. Markets will watch closely for insights into inflation projections and future rate moves in 2025. Initial jobless claims scheduled for December 19th. These claims are forecasted to rise to 245,000, offering insights into the labor market's health. Core PCE price index scheduled for December 20th. The Fed's preferred inflation gauge is expected to rise 0.2% month-over-month and remain steady at 2.8% year-over-year, reinforcing the narrative of easing inflation. On the global front, China's economic data scheduled for December 17th. Industrial production and retail sales data will provide key insights into China's economic recovery momentum. Bank of England rate decision is coming for December 19th. The Bank of England is expected to hold rates steady at 4.75% amid lingering inflation pressures. Crude oil markets: the inventories are forecast to decline further, potentially supporting energy prices amid seasonal demand. To recap, last week showed continued resilience in the labor market and services sector, while manufacturing remains under pressure. Financial markets were mixed, with gains in technology offset by broader declines. This week, all eyes will be on the Fed Reserve, US inflation data, and retail sales as we head into the year end. Let's stay vigilant, informed, and prepared as we navigate these key developments. Thank you for joining the Business School, and I'll see you next time for another economic and market update.